Thanks, Sarel, and good morning, everyone. So we're looking at Renergen and its half-year results. On an executive summary overall, a macro environment, rising interest rates would make the on the fundraising part a bit more challenging, higher interest rates they would pay, and also a bit more risk-off environment currently. Although the resources that they have is in demand. If we think about LNG in the future, shift to more sustainable energies, and helium also being a limited resource with various use cases. We see a lot of future growth while that the management anticipates. They guided their EBITDA, they expected to be eventually between 5.7 to 6.2 billion. That's around the 2027 financial year thereabouts. So it's only once phase 2 is completed. Taking into account the current market cap is around 1.8 billion, so a lot of potential growth. And the phase 1 Virginia gas project that was done you can see there about 2,700 gigajoules of liquid natural gas and 350 kgs of liquid helium. And phase 2 is expected to be roughly around 12 times the size of this. So a lot of potential future growth in this regard. However, we see a lot of risks in the investment case. Some of them being your normal commodity player with commodity price and currency risk, but especially so on the operational side, as we see some of these leakages coming through recently, delaying a bit the operations on the phase 1. And then also the fundraising part is also another serious risk, as if they don't get the funding, they won't be able to get the necessary assets or operations up and going. And the long time horizon, as mentioned, financial year 2027, thereabout, that also you have to wait a long time before it ramps up to this full profitability. And if you take time value into account, and then it also, I think whenever there's a going concern matter raised by the auditors as well, I think it's also worth pointing out, so that being a risk, and it could also be a potential takeover target one day. We therefore have a sell recommendation, as we just think currently the potential risks outweighs this, let's say, future growth possibly. So now heading to the next slide, we'll look at the financial results. Just overall, you can see there, so they started producing LNG from about September last year. And that's why you can see that revenue increasing significantly, and so also going from a gross loss to a gross profit in the new year. And the other operating income is mainly due to forex gains that it had in the previous year, and compared to in the current year there was forex losses. So those coming mainly due to their foreign debt and trade payables. And you can see also operating expenses dramatically increasing. That's due as operations ramp up, but also due to in the previous year, as they were building out phase 1, they capitalized a lot of the costs, and now these costs are just normally expensed, and combined with the depreciation that's starting as assets become ready for use. The interest income would have increased with rising interest rates, and also they are required to maintain a certain amount of cash levels, so that those levels stay increased. And then the interest expense also increasing as they utilize more debt funding and interest rates increasing. So this just breaks down some of the operating expenses, how it increased. You can see employee cost. That's a large portion, or the main result there would have been some of these employee costs being capitalized in the previous year. They mentioned that the headcount remained flat. As I mentioned, there was forex losses in the current year. And then as the operations increased, you would have seen the selling and distribution, office, repairs and maintenance increasing. They also had these repairs on the cold box that would also, I would expect to be part of those repairs in that portion there. And then the depreciation and amortization would have increased as assets were made ready for use. And then, so two main concerns or risks that I pointed out just to kind of visually present them a bit. So this long time horizon. So first, that's the time value of money that I would say is the first reduction there. But if I maybe just first rewind to what this chart, the left-hand side, so the black bar. So I took there what would be the expected target price in 2027 based on our scenario and or forecast. And then the impact, because you have to discount that value back to today's time value. So that's that first almost 31 rands that you can see decreases the share value. And then secondly, we took the dilution part, so that that 59 rands in 2027, that also now assumes that when they raise the equity and everything, they don't have to increase the share quantities, but obviously they will have to. So the dilution part is the next part, how much that value decreases. So management guided that they, in this first tranche, they expect to raise about $150 million and estimate about 67.5 million shares. But in our estimate, we think it's going to be more around 136 million in the first tranche, and then they have to issue another 236 million in the second tranche shares, because they plan to raise another $260 million in the second tranche later. So that our assumption is mainly around them achieving a share price of around 22 Rand on the NASDAQ IPO listing. Then, so looking at the assets, let's say that they have all these resources to the helium. So it's going to be now this first large project for South Africa, which is a bit more on the exciting side. And as mentioned, there are various use cases for it. It being also a scarce type of resource in the world. And then it's not necessarily we're going to produce as much as some of the other large countries like Qatar, Algeria, or the USA. But I think what also makes it a bit more exciting is they quoted their concentration is a lot higher. So you can see on that the right-hand side of this yellow block, concentration levels there going, almost to 0.4, where Renergen stated around 3.4% there. So significantly higher concentration levels that might make it a bit more efficient to get out of the ground. Share price performance. So I think if you look at the graph at the bottom side over the last 3 years, I think you would have been happy until about mid 2022, and then from there on, it had a downward trajectory. And we'll move to the next. Thanks. And then on a valuation front, so we decreased our intrinsic value to 7.8 Rand. That's a downside of about 40% compared to the share price that I have here. It was 6 November. And then I also used the price to book just to give you a pricing multiple, as we won't be able to use really a price to sales or earnings, as it doesn't really yet have, or it only now started with a bit of sales and earnings, not really, well, it's loss making still. So there you can see it decreased to around a 2.5, but it depends. The share has gone down a bit further, I think, from 6 November. But yeah, this price to book above the 2 level. In contrast, Sasol, but being bigger, more established, but less, let's say, potential growth, is sitting at a price to book around 0.7. And then lastly, from my side, on the valuation front, as mentioned, so we decreased our intrinsic value, just looking at, we make use of a bear base and a bull case. So in our worst case scenario, bear case, due to the going concern risk, we actually gave it a R0 on that side. And then the base case, we have a R8 intrinsic value, and our bull case is a R30, where we used management guidance of their EBITDA, and we used a more of an attractive enterprise value to EBITDA ratio at the end of the horizon. So as they achieve their operational milestones and funding milestones, we'll probably shift this probability more to the bull case away from the bear case, and vice versa as well. But due to the current period having some operational delays, and also the NASDAQ IPO, we haven't seen progress yet on that side, and combined with a low share price at the moment, we rather shifted to a probability more to the bear case. That brings me to the end of my side of the presentation. Thanks.
Thank you very much, Pierre. I'm now going to hand to Shaun to talk to us about the graph. Let me just change the slide for you. Go to the next one. There we go. Shaunie, take it away.
Yeah. Good morning, everybody. Yeah, not much positive news, and the technical chart is not good news either. You can see the chart of Renergen there. It shows the share price is trading far below its 200-day moving average, as well as its 21 and 40-day moving averages. So the long-term and medium-term trends are bearish. In the short term, you can also see there the share price is trading within what I call a symmetrical triangle chart pattern. It's also testing that lower support trend line. That was until yesterday's close, what you see there. It did open slightly bit higher today, but it's still testing that support trend line. So if the support holds, we can expect the share price to maybe rally at a slightly bit higher to retest that upper resistance trend line, that blue line coming down of that triangle chart pattern, before encountering obviously the 21 and 40-day moving averages, which also will be more resistance there. In the longer term, the resistance is at the 16 Rand 12 level, and then if it goes past that, we could maybe see 17 Rand. That's what I call it, the support resistance zone. But I don't know, it's not too exciting on the upside potential. I would rather expect that the share price would be moving lower and retesting that previous support at that 9 Rand level. Remember, as Pierre said, now our intrinsic value is below that support level. It's at 780, and we also give a sell recommendation on the share. So the bearish sentiment is also confirmed with the MACD indicator trading in oversold territory, and also looks set to cross below its signal line, obviously giving a more bearish signal. The shorter term stochastic indicator, as you can see there, is trading in oversold territory, but it's not giving any clear bullish signals. So from my side, I'll say it's not a very exciting chart. Okay, thank you.
Thank you very much, Shaun. Thank you, Pierre. Definitely insightful. Yeah, I think what we have to remember is these guys are trying to get a business off the ground. Yeah, there is natural gas involved and so on, and there's lots of potential should they manage to get it done. We all know that they're trying to raise a monumental amount of money, $750 million through the IPO, and that, if I'm correct, Pierre, or that's the total amount of funding that they required when they set out to do phase 2. And if you think about it, it's going to take a while for them to make money, even if they do manage to get the product out of the ground, because they're going to have to service those loans. And those will definitely attract some interest. So in my books, this is not a share that you want to trade on a regular basis, and it's simply, for me, a wild punt into, are they going to make it or aren't they going to make it? If they do, there's, of course, some proper upside. But I think if you look at it from a technical point of view, with Shaun's technicals pointing that the drop can continue, and it will, the next big support level is around the 9 Rand level, and that's pretty close to where Pierre says the intrinsic value is, as he's discounted it back from the 59 Rand with the time value of money and so on from FY27. What I have done for you guys is we've had Vaughan chat to Stefano Marani, who's the CEO. Stefano was in Texas at the time, so it's not a chat. We sent the questions to him, and Stefano addressed the questions. So you're welcome. In the chat, I've put the link to it, the full picture for those who haven't seen it. We do produce these full picture insights with Vaughan from time to time, and we publish them. And then there we hear it from the horse's mouth. So Vaughan chats to the CEO, and the CEO explains how they run the company, what they expect, and so on within the regulations of things that they may and may not say. So we know that Stefano Marani is still in Texas. We saw the news articles last week, which said that he's in Texas, and some people were concerned that he wasn't in South Africa and looking after operations, but I think they're desperately trying to secure that NASDAQ listing so that they can get off the ground and start with phase 2. I'm going to go to the chat now, and let's see if we've got some questions. Yeah, for those of you who want to watch the video, I placed it in the chat. If you just go further up, you'll see that there's a bit.ly link, a PSG full picture Renergen. Please copy that link, and then you can go and watch it at your leisure in your browser, in your normal web browser. Definitely a nice chat there. Clive says, thanks for the detailed presentation. We'll keep an eye and keep the stock on his watch list. And then Andre says, any comment to the CEO relocating to the USA? Andre, I've referred to it, the fact that he is sitting in Texas at the moment, and there were concerns about it, but I think it's more to do with trying to secure financing and that. And in the chat, in the full picture chat, you'll also hear him mention that he thinks that most of the helium business sits between Houston and Austin, and that's the reason why he's based there in the US. Okay, let's see. Can you post the link again? I joined late. Ray, just scroll up in the chat, and if you don't see it, I will repost it. Let me go and copy it right now, and then post it back down in the chat for you guys as well. There we go. Yeah, I think that is it. There we go. That's a long link now. It's not the shortcut, but it's definitely there. So if you copy that and paste it into your browser, you can watch the full picture interview between Vaughan and Stefano Marani. Any further questions? I don't see any other questions. Richard says, thanks for the presentation. Yeah, I think to summarize, definitely a stock that's struggling at the moment, trying to secure funding for their second phase. Got lots of prospects, can do very, very well over the long term, but should be considered a punt. So if you've got a bit of cash lying in your stock account, then watch out for it. See if it breaks the support level at the moment. Goes down to Pierre's levels around 8-9 rand, and then, I mean, Pierre said the bear case is it can go to zero. If you buy 1,000 at 8 rand, you lose 8,000 bucks. That's about the story. I don't see any further questions. Johan says, please keep us up to date. Yeah, we will. We'll definitely chat about Renergen again in the future. I think from time to time we keep rolling the same set of stocks because that's the stocks that most of our clients trade on. So we do the research on a rolling basis as the results and stuff come out, and when we get news from Renergen, we'll definitely update you. I don't see any further questions, so I'm going to close the meeting and thank you all for your time. I hope you have a fantastic Thursday, and we'll see you next week. And next week, for once, I know what it is. It's Aspen. I see Shaun's giving me a thumbs up there. So next week, we're going to be chatting about Aspen. We look forward to hosting you guys then. Cheers. Have a good Thursday. Bye-bye.